Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We go into explaining what's going on with mortgage rates on any given day, whether it's might be impacted by economic calendar or headline news or geopolitical, sometimes a combination. But even worse than that, sometimes market changes and changes where the sentiment is now good news is now bad news, and people don't understand what's going on. And we're here to give the explanation behind the scenes there. A little bit about myself is I am a loan officer. I do work with the National Lender. We're here to help you guys out. If you guys got questions or anything we can help you out with, please feel free to reach out. We do lend in all 50 states, so we'd love to be able to talk to you a little bit about your refinance needs, or if you're looking to buy and get pre-approved, we'd love to be able to talk to you about those scenarios as well. Without further ado, we'll jump right into it. We'll start off with our economic calendar. Today we got the ISM Manufacturing PMI. So for the month of February, so January, anything above 50 on these index is considered growing or expansion. So we had a 57.6 in January. Forecast have a slight uptick to 58, and it exceeded that to 58.6. Now here's a lower weighted piece of information. It's construction spending. It doesn't carry a lot of weight here, but it's still nice to kind of look at. December was revised higher from 0.2% to 0.8%, and forecast was for January is 0.2% and well exceeded that to 1.3%. So December and January ended up being much better than what they had expected. But again, these don't carry a lot of weight in the markets here. Now, today's news, again, is being driven by the Ukraine and Russia conflict. Right now, the sentiment in the markets is that it's going to get worse before it gets better. They are looking at also kind of what the Fed Bank will be doing. U.S. banks will be probably hit some, but probably not as bad as the European banks in terms of the sanctions that were just passed along, which was taking the central, taking the U.S. Russia off the U.S. Treasury, where they won't be able to, their central bank and our Treasury won't be communicating, as well as the SWIFT accounts. So European banks will be hit a little bit harder on those. And of course, we're seeing a big spike in energy prices as well. Due to the conflict, as Russia is a big producer in oil out there. So that's pretty much the big thing here today. Matters Maximum Securities is we're still getting that flight to safety is what's happening. The stock market is going down, so that money is flowing into treasuries and bonds. Yesterday we ended up closing up 63 basis points, touching right up at the 25-day moving average. Today we are up again. We're up currently about 45 basis points. So that loan yesterday, you got rate quoted yesterday, or let's say Friday, was up, was cost you 1 point. Now it would be no point loan. So that's how much of improvement we should have seen in rates. So we should be seeing at least anywhere between half to maybe over these last 2 days about 0.5%, at least 0.5%, maybe a little bit more on the pricing here for mortgage rates here. So that's the good news here. We are seeing improvements here, and here's the day's volatility. We had went down slightly, but we quickly rose upwards, and then over the last few moments here, we've kind of gone down a little bit here as a result. So, but still overall very good for the bond market. As I like to tell people, we are kind of like the undertakers of the markets. Stock market, when things are going good, stock market does well, and we don't do too well. And when the stock market's doing bad, we end up doing pretty well. So, and then of course treasuries, we're seeing a big, huge drop in treasuries again. We dropped below 25-day moving average, just moving towards the 100-day moving average right now, and that is we're down to about 1.72. And this is just after about a week or two where we were at 2%. So that's how much of a drop in treasuries we've gone in terms of yields here. Now, last but not least, we'll touch on the average pricing for a mortgage rate. These are conforming limits. They do have points built into these. And of course, mortgage rates are subjective because it depends on what your qualifications are. So not everybody gets the same rate, primarily because, well, a lot of different variables, from equity in a property, which means down payment, or how much equity you have in the property, to credit scores, to of course, days unlocked type of loan program, type of property, if it's a single family versus condo or something like that, to even occupancy, if it's owner occupied versus a owner occupied versus investment or a second home. And then, of course, we got the other item. I'm trying to remember what that would be. If it's a cash or rate term, if you're doing refinance. So there's different things that affect it. So let's touch on that. 30 years not 4.04, and the 15 years at 3.37. All right. So again, if you guys got questions, please reach out. We'd love to be able to talk to you guys. We like to communicate. In the meantime, if you guys like these videos, please help us out and smash that like button and share us. We greatly appreciate it. Lending any support. Those are the best ways you can help us out. Otherwise, we'll look forward to see you guys tomorrow's video. You guys have a great rest of your day. Bye-bye.